The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 31st day of January. The month, the candle of January is about to expire. From tomorrow, we get February. That's really important. I'll explain why. You see the E-minis? The Dow is up 120. The E-mini is up $2.50. There's a huge divergence going on. Certain stocks, just a handful, fewer and fewer, are leading this market higher. Now is where I'm beginning to see a much greater chance that the candle I was expecting for January could in fact become a candle for February if certain levels appear. So let me show you something here. 2878.50 on the March contract of the E-mini pops up to 2878 in just almost a straight line move from the 2667 low back in early January. Look at this. Goes straight up, pulls back, and in 2 days, we take out 1, 2, 3, 4, 5.5 sessions worth of price movement. That's not a big deal. What is a big deal is that the rally that we've got right now is, it had, first of all, a fade, a little less than half of yesterday's entire candle, high of 28.58, low of 28.18. Today's high is 28.39.75. Well, it's about halfway. Right now, it's under the 9-period moving average. Days young, anything can happen. This is just not a good sign. And it says to me that the down arrow that I was forced to put in the E-mini, I couldn't do it in some of the others because they hadn't crossed negative in the MACD and the stochastic. MACD is now negative, stochastic's down at under 80%, and you closed yesterday under the 9-period moving average. Although the down arrow invariably means that you're going from a sell signal pretty close to a sell mode, I only go one step at a time. Sell signal, had no choice but put the down arrow in. Yes, you could bounce higher. If you bounce above 2878.50, you've recycled. That becomes a new, this is a G/C if that's the case, and that'll become a D. So you're back where you started. But it would be very good action if it was able to do that. Good, not great, good action. I'm suspecting, based on this candle that we're looking at, this big red candle of the monster green candle last week, but having made a new high this week, that if there's weakness all week, in other words, the next 2.5 sessions, don't see a big move in the E-mini, at least nothing above yesterday's high of 28.58. And that's going to take, 58. Wow, that's 24 points. That's 240 down points. I'm not sure what's going to do that. 120-minute chart just made his peak D. What is a peak D in the Chapman wave methodology? Let me just quickly show you this. Peak D is where you identify the lowest low bar and merely count each successively higher peak, the fourth highest peak, alphabetized with uppercase on the way up, lowercase on the way down. That fourth highest peak of D. You can go E, F, and G, but D is where other things can happen. Look at the other things here. You've got a leg D that's gone to a peak D in the 120-minute chart with one of the most pathetic quick A to B to C to D peaks in the 120-minute chart. Let me just give you a demonstration here. Whoops, that's not the one. Just look at this. I'm going to take a moment here before I go through all the numbers. Why? Because this is a really important moment. Look, from this low right here in the E-mini at 28.02 back at about 10 o'clock at night on the 21st, it went all the way from the 28.02 to the 28.55 level. Whoops, no, let's go to the 28.44 level. That's big. And look at the time it took. And look at this tiny little thing here. Look at all the other ones. Even this D here went from the 27.69 level to the 28.15. That's big. It takes time. This says to me, I'm wary. Now, it turns out that we've got long positions, almost all long positions, and I'm we did have a short position, got out at a break even yesterday. I'm actually not sure why I put it at break even. When I should have raised it. If I had raised it, maybe it would stop out. But in the meantime, I'm getting ready to start implementing certain areas. We've been trying to short certain things like the home builders. Haven't quite just missed it. Had one that took a tiny little loss, and then it plummeted from the 151, I think, to 140. What did we do? Toll Brothers, I'm sorry, not 151. It went from 51.75. Took a tiny 1% loss, and then it popped up a fraction high and then plummeted to the 46s. I mean, that's a good identification. It's good technique, good everything, just allows the implementation of the technique itself. So, okay, let's get on. Now we can go to this. I wanted to show you that the E-mini is lagging decisively. You've got a couple of Dow stocks that are leading the way up. I'm kind of concerned because of the daily chart starting to move negatively in the technicals, on balance volume sharply lower, stochastic sharply lower. Weekly chart still very good, but you've got the relative strength turning down sharply, and on balance volume at 97.39 is really good. So I just have to treat these as short term, that maybe we'll get into a deeper sell mode as we move along. Let's just run the numbers now. INDU. The Dow is down, is up 119 at 26,197. 26,616 is the all-time high on the 26th. This is not a very, I drew this H pattern in the Chapman wave methodology, the lowercase h pattern, formidable when it's at a top. And this is potentially here. But until the Dow closes in the 25,900s, the daily chart is still not yet even. It's just about to go to a down arrow. We'll see how the daily chart, got to wait for the day to close. Weekly chart still very strong inside bar this far. Peak E sell mode in the 120-minute chart. Huge monthly leg up. E still very good. S&P, SPX, .X. S&P right now is up 3.39, made a high of 28.72.87 and a peak F top. Everything about this is, no, it's probably not a recycle. This is an F top. And MACD's turning down, stochastics turning down, the daily, weekly still good. Technically, I suggest to you that the moment that the S&P starts to cross into the 28.16, 28.13 area, it's going to go deeper to the downside. QQQ, the NDX 100 trading vehicle, power shares trading up 47 cents. Made a peak E in the Chapman wave at 170.95 4 days ago. Held the 9-period moving average. This has got a much better configuration. One of the reasons is that the SMHs have held quite well, but they haven't taken out the most recent high. We're going to be watching that one very closely. Simply put, at 167, the QQQs go to a sell mode as it stands right now. They haven't even given a sell signal. IWM, now it's very interesting because IWM has been in its own trajectory. It's very weak, 160.63 peak F top. Sell mode as we speak. I'm upgrading from a sell signal to a sell mode, unless by the end of the day it goes over 157.50. It's at 156.84 right now. Very poor action. We'll be back. We've got a lot to do. I want to be as thorough as possible because I think it's going to be a really important week with all from this afternoon to tomorrow afternoon. Wow, you've got Amazon, Apple, you've got Facebook, you've got Microsoft. It's a very interesting period.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. While we're going through these charts, I had a question about the DXJ, which is the WT Japan hedge fund, equity fund. I'd be a little careful. It made a peak F-top in the 62s just 3 weeks ago, and now it's trading at 60.63. I think you got to watch the 59s. That's the area that you got to really keep an eye on that. You might... I don't want to tell you to get out of this because looking out, I think it's going to be very strong. But on a shorter-term basis, I wouldn't be surprised if you see in February it tests the 59 to 58 area. Okay, let's get back to our story here. So I wanted to look at gold. I wanted to show you something very interesting here. Gold has made a peak D in the Chapman Wave. Remember, we're looking at Ds, and that's where other things can happen. Look at the deep weekly chart in the gold contract, continuous contract way back there in, I think that was in September the 8th or something like that. Yeah, September, the week of September the 8th, 1372 was the high, pulls back to the 1240s, bounces up to the 1368, 1370 level, trading now at 1345. I think that gold is having a high-level consolidation, but just be really careful because at 1345, I don't care what the reason is. If it closes, not if it pulls back, but if it closes under this candle right here, the candle of the 18th, 1329.4, closes, remember, gold is going to have a deeper correction, and it keeps doing this. This is the smallest move in the weekly chart that it's had in a while, in that's like a single leg A up. So far the weekly chart is holding very nicely, but I would prefer visually to see a cup formation form here with it trading from the 1345 into the 1360, 1362 area, rather than pulling back even just a tad under yesterday's low of 1337.5. That close, I should say, closing below yesterday's low. Okay, silver itself, SI, silver is trading. Yes, this is what you want to see. It's a much better candle in silver, up 0.19 at 1724. But the day's young. It's just a retracement. But this is kind of the greenish candle I would have liked to have seen in gold. A stronger move, maybe a 12-point move. So this is not. This is 18 cents. And in the silver at 17.24. Silver needs to, the equivalent would be silver pushing into the 17.38. That would be make the cup formation. As it is, It better not take out the low of yesterday, which is 17.04. Let's call it 17. Trades in the 16s. I think you can test the candle of the 23rd of 16.73. This is a very important period. Why? Because you see the dollar is actually looking quite pathetic. But it is starting to turn around in the stochastic. And the MACD is flattening out. Histogram starting to improve. So it won't take much, even for a bounce, just for the dollar trading at 89.07 down 14 cents, to have a decent move into the 90.10s. That'll put it nicely above the 9-period moving average for the first time. Actually, it'll only be the second time since it broke down. On the 15th of December, it had a green candle above the 9-period moving average. Since then, it's only had one green candle above, and that's on the 9th of January. So that 9-period moving average of 89.61, it's getting closer into focus. The weekly chart still says, very weak. So it would be a bounce. EUR-USD. Sneeze coming. Let's see if I can hold it off. EUR-USD. Yeah, look at this. This is the pattern that we're looking at. It needs that leg D to complete this buy mode. Completing the buy mode means that it goes to a leg D. It can then go even higher, but D is what you expect from a Chapman wave buy mode. This would be the second one. Otherwise, it's an alternate count, and even an alternate count doesn't work. That is a peak C. It needs to go. Euro needs to go above the high of the 25th of January, 1.25369. 1.000 penny will be what's needed to go to D. And if it's this week, it extends leg B. If it's next week, it goes to a C. So far, it's holding very nicely. And the USD JPY, I got a lot of questions coming in. I'll try to get to them all. Look, that's what you want to see. And sometimes it's a precursor to the dollar's move. Arch formation fails miserably, but in the daily, not the weekly. Weekly is holding very nicely above the lows of September, the second week of September. So this is going to be very important. At 109.32, up 55 cents. I want to see this above the 9-period moving average. This is very much like the dollar. It hasn't closed above the 9-period moving average for January, except for the very beginning, when it had a nice move up to the 5th, and that was it. So the 9-period moving average at 109.55, it's a very strong resistance. I think it's going to try to get above it, maybe by tomorrow. We'll see. Now, let's go through this. This is very important. The TLT, the Lehman 20-year T-bond fund, it tried to rally from a leg D this morning. The low yesterday was 121.70. It's trading at 122.11. It is under the 9-period exponential moving average in the daily. It's made an arch formation. It's taken an extra amount of time to close below it 2 to 3 days, and now it's still continuing to be below that left side 122.42 low of the 25th of October. Arch formation, yeah, it's going to take a lot for it to really close above 123.46, nicely above the 9-period moving average, and the weekly chart is now under the 200-period moving average decisively of 123.05. So let's see what the TBT is doing. TBT should be up in leg D. It gone to a D, and it's a nice candle, but it will be a peak D if it doesn't go above 36. I think that was, what was that, 36.74? Yeah, 36.74 is the number that it needs to break above, and then it extends leg D. So, and 36.78 is the number to look for to start leg C. This is a great leg C. Remember the whole thing with the overlapping wave I was talking about in the TNX and all this stuff? All I can say is that if the TBT, ultra short Lehman 20-year Treasury bond ETF, closes above 36.78, the next level will be 37.21. Once above that, it starts to fly because it's only leg C and it should go to a D. Wow. What'll happen there? And I think that yields are going to be an issue. They are an issue in the HGX. Look at this. Look at that candle. Even today, tried to rally and failed. Peak F top. Wow, those F tops. You got to be careful. Okay? A leg G/C in the weekly chart. So yields, I think we've got an issue here. Just real quickly, we're going to go to a break very soon. And I didn't do that before, but I'll do it now. At 28.75, the E-mini up 4.25. Not bad action. It needs to break above 28.33. And that'll be very positive on the day. Closing below, holding below 38.24 for two 10-minute bars would be very negative. You see the peak in the 10-minute chart. It was a D right there. Oh, there it is. A D and then a spike to the upside. Rogue wave spike to the upside in the 5-minute. This is not the action you would expect after 300 and something points to the downside yesterday. Up 5.5 in the E-mini. Not good. Basil Chapman, Tiger Technicians Hour. I'll be back straight after this break. We've got a lot of stocks to look at. And of course, you've got Wednesday afternoon, Thursday afternoon, and Friday's Exxon and CVX. Wow, this is a busy week. Also, we're looking forward. There was a request.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, I was asked if I would show my triple yield chart that I show subscribers to my opening call every weekend, and it's coming up right now. Look, here it is. First of all, the chart that's in front of it is wood, which is the iShares Global Timber and Forestry ETF. It's up 0.09. Look at that red candle, first red candle in quite a while. But the HEX Philadelphia Housing Sector Index is down 73 at 350.61, down 19 points from the high that was made just 2 weeks ago. Ooh, that's big. So now let's look at this. Now, what we've got is we're in leg C, overlapping wave, leg C, in the 30-year white TYX yield, T-bond yield, that is, 30-year T-bond. The 10-year T-note yield, TNX brown, is at 27.39 in leg D. The 5-year FVX, 5-year T-note yield, cyan color, is in a huge leg C to the upside. It started its move when the others were making their lows, and that goes all the way back to September. That was when the dollar made its initial low and then had a big rebound. Well, a big rebound in percentage terms, but a very tiny one in the overall picture from the highs that were made. So what we're looking at here is that you see the squeeze. I really think that we're getting closer and closer to where yields start to impact some areas, and then those some areas, like housing, etc., will impact the general market. And until then, what we're looking at is just the rotational aspect that says, hey, don't worry about yields yet. You've still got other areas that are working, but they're fewer and fewer in between. So I wanted to show that. I also had a request where I show this a chart that every once in a while I show almost by accident, because I don't follow it other than to have it on my thing, and originally being from South Africa. That's the gold chart. Now, it's the XAU. No. It is called the dollar Z. Where's the title? The Dow Jones South Africa Stock Index in US dollars. This is the pattern. And you can see that it's an all-time high. I don't know if it's all-time high, but I think it is. But it's the industrials. They do have a couple of mining companies, but I think it's more the industrials. So this is South Africa, even though the economy is supposedly terrible. Look, the stock market's on fire. It's in leg E, like all of us in E, right? We've got to watch this closely. All right, I want to get out of this now, and I want to go back to something we were talking about, a question about Ford. Someone had asked me in the den whether or not they should keep holding Ford, and I said no, I would get out. General Motors is acting much better. Not great, but much better. Ford seems to have a problem. I'm beginning to think I know what the problem is. Remember, for a long time I've been saying, at some point I'm going to try to find an hour or maybe hour, 15 minutes. Just I got a lot of automobile companies, stations around here that that sell cars. I thought I'd just slip by. It's part of what I like to do. It's very important for me just to get an overview, an economic perspective in a different way. So I've been to a lot of the dealerships. I was at a Ford dealership. When was it? Yesterday, day before. Anyway, I was at a Ford dealership, and excuse me. So I'm looking at various products, and they've got quite a good lineup, but mostly I see trucks. So within that context, and I drove one of the cars, it really was very nice. But I'm thinking, wow, this is it was an SUV, and I thought, gee, this is an area there's a lot of competition. They've improved it a lot. It did the job very nicely. But it explained, in a sense, what I'm looking at, that some of the intrinsic value of these companies has to do with a whole bunch of the inner workings, like the bookkeeping, like the maybe it's the pensions. It just has to do with a lot of other things, and that there's so much competition now in the auto industry that I think that's what we're looking at. They're selling a lot of cars because they're leasing and they're doing all sorts of things, and they have a lot of plans. They're making money, most of their money, from the electrical accoutrements, GPS or whatever it is that you have, blind spot, whatever it is. But what I'm really looking at here is Ford. That gap down was very serious, but if it held from the 1335 high that was made on the 16th of January, if it gapped down and then came right back and it was trading at 12.50 now, say, you know what, that is really good action. It still has a long way to go. But if it holds here, then the worst case would be a test of the 200-period exponential moving average at 11.89, which corresponds to the 11.98 9-period moving average in the weekly chart. No, it just went right through that. And this is saying to me, this is a peak D in the daily, peak D in the weekly, and only a single leg A up attempt and failure so far in the monthly. This is saying to me other things are going on. Now, I wanted to quickly have a look at Toyota Motors. I want you to put this into context. I tried some Toyota vehicles, and let me just do this notation here. So that's an A, B, and a failure, but it holds the low. A, B, so this is D/B. All right, this is E, F, and a G. E, F, and a G. Toyota Motors at 137.78, down $1.84. So I'm going through this with them, and I say, okay, now what about if I want to sync with my cell phone, or I have an Android, wife has an Apple. Oh, how is that easy stuff to do? Oh, he says, it's not, you can do it. It's he kind of sort of hummed and hawed a little bit. I didn't get a real answer, but it made out to me that it's just a little technical thing that I have to spend time on. So I go online, and there are like 40-something reviews that are just ripping into Toyota for, I don't know if it's all the models, but it's the Camry and the RAV4. And that's serious. I mean, can you believe that a company would allow their cars to go out with the most, from what I believe, is just the most cumbersome and problematic entertainment info center? I don't see how they could do that. You've got so much money, just put it into getting it right, and then give it out. This is really a terrible thing. I think Toyota Motors is going to have a serious problem, because if I was about to buy a Toyota vehicle, I would say, gee, I'm going to need that, even though I could use it from my cell phone. So, and then somebody says Volkswagen worse. Volkswagen emissions scandal and all that, but the cars that they're producing now have really improved quite a bit over the last year. I was in one the other day. I thought, hey, this is a much better job. Still got the reliability is an issue, but it really has improved. I'd rather see improvement than going ahead like Toyota Motors just did. That is terrible. All right, well, I've got that out of the way. I'm just trying. I did that only because of the Ford issue, and Ford seems to be a very special case. General Motors, which we are still long, is trading down 19 cents at 42.51. It's kind of stuck in a range for now. I'll be right back. Basil Chapman, back to this hour. Dow's up 144. S&P's up 6.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Let me just quickly finish up on this automotive segment, we'll call it. Hog down 153 at 49.31. Hits 56.50 just 3 days ago. Recovery high, not an all-time high. It's way off the all-time high. Had made a peak D in the monthly, pulled back from the 64s, goes down to the 44s, rallies quite nicely to that 56.50 high. That's also leg E in the left side, right side, cup formation, Chapman wave target line. It gets close to the high that we were targeting. Just we didn't have a position. I was looking at it at 56.95 on the 23rd of June of 2007. Bam! It goes to the 56.50 level. Earnings come out, slumps. So that's that. I want you to look at FCAU, which is, I still see a lot of Jeeps. And when I go by the Jeep place, they're selling a lot of Jeeps. So this, I'm going to call this a G for now in the daily, arching over. They're getting a little tired. Is this a leg G/C in the weekly? It's still one of the best of the automobile companies. It's not big 3 anymore in America, but at least the Fiat Chrysler combined company is looking, really, it's done very well. And I suspect it's because just people don't seem to love Jeeps. Now, the other thing is, just real quickly, Honda HMC. I've actually driven the Honda. Okay, let's see, that's the Honda SUV. I thought it was a little underpowered. Not a bad car, but I just thought it was underpowered. I don't like this new transmission, the variable, the belt. I remember there was a car years and years ago called the DAF. It was a Dutch car. It had this little thing. It used to go toot, toot, toot. Anyway, that's the principle. But they'll refine it. They'll get it down. Let's go to Jerry in the Back Bay. Jerry, how are you?
Hello?
Hi, Jerry. How are you doing?
All right. Yeah, I own UNH, and I've owned it a long time, and I'm getting a little nervous. I'm thinking of writing an option against it.
So UNH, United Health Group, managed healthcare, I mean, they've just been the absolute darlings of Wall Street in terms of the healthcare stocks. Just a beautiful, beautiful rally. Leg D in the weekly. I've got this as a leg C. I've really debated a long time. There's no other way. I've called it a leg C in the weekly chart, but I did get an F with that sharp pullback yesterday, and today's a bounce and sort of fading. Jerry, I'm going to do this. I know we've spoken before about stocks that you've had for a while that you've liked, and I've said to you, I don't want to disturb a really good position, but what I am going to say to you is that the type of the type of pressure that United Health might be up against, trading at 237.91, up $1.26 right now, from the chart formation that I'm looking at, is still a very strong monthly chart. Weekly is good, but it's starting to weaken. I'm going to suggest that you think it through. There's no rush to do it right this minute, $4 or $5, because in a long-term position, it's not going to make a big deal. But what I am going to say to you is, I would immediately take something off, because you're talking about it in the sense that you're a little bit nervous, and that says to me, you know what? If you've had a stock for a long time, you've done well, and you're nervous, just ease your nervousness by saying, look, I'm going to take something off right now. I'm rewarding myself for being patient, but at this particular point, I want to sleep well at night. I want to know that I've locked in a huge chunk of the gain, even if it's not the full gain, but at least it's a part. So I'm going to say to you at 237, I would take something off. Now, over a period of 3 to 4 days, what I would say to you is, it's held the 9-period moving average of 231 in the weekly chart, so 237. I would just give the rest a little while, and I'm going to say to you, proportion your holding so that what you take off now, this is not what you're going to put back. This is just going to reward yourself and say, I'll decide. I can put it back. I don't have to put it back. It is done. I'm done with this part of my portfolio with UNH for this amount. Whatever percent or number of shares, it doesn't matter. That's done. The second tranche that I'm going to say to you, this is the one that you really want to be thinking because of my look at the weekly chart and monthly chart. This is where I would like to put it back to work. So that one I would say I'd put a stop, which is probably going to be taken out, but I'd still put a stop at about 232, 5 points down. And that is the one that you want to put back. Where do you want to put it back? Somewhere you want to consider, not actually put it back, but you want to consider putting it back between 222 and 218. If it gets there. If it doesn't get there, well, it's great. Your other position is holding very well. And then what I would also say to you is, in between, I know you don't like to do it, but in between, if it starts to stabilize very well, let's just say you took out whatever money that you wanted for the second tranche, you've taken it out at 232. Darn, the thing's sitting at 235, 236, and it's sitting there for a week. Don't be impatient. I think you're going to have time. I would dedicate to put that back lower down. So I'm saying to you that I would keep a call. I take something off right now, and then I'd have one position that I say, this is a position that I do want to put back. I'm going to say, think 6 weeks to 2 months. Don't think price, think time. Hey, I might be completely wrong, but that's kind of the way I'm looking at this, because I've missed the move on UNH. I keep thinking great stock. I've missed it. That's kind of the area that I would like to be looking at 222 to 218. It's about another 18 points down. I don't know if it'll do it, but that's kind of the way I'm looking at it.
Yeah, it had that announcement yesterday about Amazon and J.P. Morgan.
Buffett, right, and Buffett, right.
And it's hard to, I mean, there's no way they're going to really be able to do anything. It's going to take years. I mean,
it's going to take, not only that, this is an area that you need even bigger people than these guys to make it succeed. You need politicians and you need time. So I'm just saying, I think it's going to be back in vogue again. I would just be a little careful when these guys are hitting it. They want it down. They want to start doing something with it. Probably if it's Buffett, he's going to wait for something, some story that it just one day it drops, 15 points for no reason. It's kind of, I think that's what he's looking for. But in the meantime, I'm just saying to you, the way it's looking, I would not take my big position out. I would take something off now, and then I would take another bit off as it gets closer to 230, and then that's the one I would want to put back later. Hope that helps
thank you. Yeah, by the way, Ford pre-announced that their earnings are going to be down this year. The stock hasn't had an uptick ever since that. Like, why would you want to own a company whose earnings are going to be down when every other company's earnings are going to be up, double digits? So
wow. Okay. Well, that's. Thank you for Thank you for telling me about that. I knew there was something going on that was deep. Thank you. That's very good information. Ford trading at 10.94. Just recently, it was in the 13s. This is a serious hit. So a couple of things that we want to do. What is this? We've got a moment here. So that was Ford. I wanted to go to Honda. Maserati. I want to. Not Ferrari. Ferrari has come back soaring and is near the highs. This is telling me that the economy, for the wealthy, the economy is doing very nicely. Thank you. We'll be back straight after this message. Dow's up 134, S&P is up 5.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Well, let's just do this real quick. Got an email from Hector. Where would you put a trading stop on this today, and how do you see the future in this stock? SQ is Square. Square Inc. point of sale software managing receipts. It's trading at 47.10. It's up $1.58. I like it, but you got to be a little careful. If you're long, you got to look to 49.58. This is kind of what I wanted for subscribers for a trade. I just never had a chance to get into it. I could have got in if it closed at the low of yesterday. I would have said, hey, maybe if it bounces a little bit, we'll climb on board. I probably would have missed it. So this is what I'm looking at. I think 49.56, the high of the 24th of November, is a target for Square. Where would you put a stop? I'd have a trading stop because yesterday's low of 42.56 was the low so far. I treat 42 as a stop. That's 5 points below where we are. But immediately, if it closes today above 47, I would immediately go. This is a short term. This is only a short term. If you're looking longer term, then I would keep a 3-point stop, a trailing 3-point stop, go to $44. But on a shorter term basis, if it closes above 47, I would say, you know what, regardless of what the market does, I put a stop under the 9-period moving average of 40, make it 44.50. Okay, just short term. But I think that this has the potential in this phase right now, if it holds well, MACD is good, stochastic is good, is to try for the 49.56 high. And I suspect if it even gets close, it's going to pop just a little above it, and then it'll take a timeout. And that'll be leg E in the monthly, and that's going to be very good. Good action. It's one that's been on my radio. I'd just be following too many other things, so it was off my radar a moment. So the question here is Boeing, is this a top for Boeing? You know, it's been dangerous to call it top for Boeing. This is a stock that's gone from the 130s just a year and a half ago up to the 355 area. Let's leave for now. Tomorrow I will start off, if you can just remind me, I'll start off, I'll do a little bit of work with Boeing because it's part of the whole area, aerospace and defense. I want to look at those, and we'll see what happens here. So with that said, stay tuned for Steve Rhodes. Stay tuned for Steve Rhodes because he's got that webinar tonight at 5 p.m. Go to the front page, check it out. You got Dave White, great shows coming up this afternoon. Tom O'Brien, I'll be back Wednesday. I'll be back tomorrow, Thursday. Have a great day and safe trading. And check out my opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.